Malaysia's GDP growth is projected to remain healthy in 2025. How would you, as an investor, position yourself to capitalize on this opportunity? Tune in to learn more. Hello everyone, I'm Kong Yik, Head of Equity for Manulife Investment Malaysia. And this is your Malaysia market outlook for the first quarter of 2025. The final quarter of last year was marked by challenges stemming from uncertainties in growth, inflation, the US presidential elections, and heightened tension in the Middle East. Donald Trump and the Republicans emerged victorious in November's US presidential elections, propelling US equity indexes to record highs with their pro-business policies. However, proposed tariffs including a 10 to 20% blanket import tariff and a 60% tariff on Chinese goods negatively impacted Asian markets, causing the MSCI Asia ex-Japan index to drop by 3.4% in November alone. The US Fed cut interest rate twice by 25 basis points each in the fourth quarter. Despite these cuts, the Fed signaled a slower pace of easing for 2025, triggering a sell-off in US Treasuries and pushing the US dollar up to a two-year high. Over in China, third quarter GDP growth aligned with expectation of 4.6%, contributing to an overall 4.8% growth over the first three quarters. This brought optimism that the government's target of around 5% is within reach. To help support this goal, policymakers announced a substantial renminbi 10 trillion package to resolve its local government debt issue, while the PBOC announced plans to loosen monetary policy in 2025. Back home in Malaysia, preliminary estimate of fourth quarter's GDP indicates a growth of 4.8%, resulting in a full-year GDP growth of 5.1%. We expect GDP growth to remain healthy between 4.5 and 5.5% in 2025, supported by private investment and domestic consumption. Meanwhile, headline inflation remained below 2% from September through November, indicating stable cost and demand conditions. Foreign investments into Malaysia continue to make headlines, with Oracle announcing a USD 6.5 billion investment to establish its first public cloud regions, marking the largest tech investment in the region to date. This positions Oracle alongside major tech players like Microsoft, Nvidia, Alphabet, and China's ByteDance. As we enter 2025, we remain cautiously optimistic on the outlook of the Malaysian equity market, while keeping a close watch on US trade policies with China and potential retaliatory measures that could impact overall investor sentiment. The Malaysian equity market should benefit from the continuous foreign investment inflows, as well as effective domestic policy reforms. Attractive valuation, appealing dividends, the potential strengthening of the ringgit, and recovery in domestic consumption are expected to further support the market's performance going forward. We maintain a neutral outlook on the Malaysian bond market based on expectations of a stable OPR and supportive local supply-demand profile. Thanks for watching Malaysia Market Outlook. Stay informed and stay tuned for more. Thank you.